Hi everyone, it's Grace. Welcome back to my channel. Thank you so much for your subscribes, likes, and comments in the last video where I explained 6 signs that the housing crash is coming. I really enjoyed reading and responding to your comments. A lot of you asked me whether the housing crash is actually coming, and if so, when. And this is a very difficult question to answer right away, but at least the data provided by the government shows that we're heading towards that direction. Since policy, market reaction, and market expectation influence each other, it's very hard to make a prediction in the long run. I created this channel with the mission to provide information, analysis, and a solution for my clients and audience. While I wish the government policies are simpler, however, we live in a real world that is far more complex. So I'm not here to debate whether a policy is good or bad from a politician's point of view, but only focus on how to cope with it from an entrepreneur's perspective. So today, I decided to continue the discussion and make another video where I focus on 6 principles you should follow in a coming housing crash to protect your asset, grow your investment, and mitigate risk before I update on the Florida market. As I address in the comment section below, this is not a one-size-fits-all situation. So for different consumers, the solution is going to be different. So if you have any specific questions, feel free to send me an email inquiry so we can discuss further. Before we begin today's video, remember to subscribe to my channel and click on the bell button so you'll get notified immediately when new videos are uploaded. Also, feel free to give a thumbs up if you find this video useful. Without further ado, let's begin today's topic. Number 1. Home ownership should also be investment that you can kill multiple birds with one stone. Whether you're buying a self-living home or keep it as a rental property, home ownership nowadays needs to give you multiple wins and give you a good return as an investment. I made a video about 5 common mistakes when buying a home that explains this thoroughly. To check out the video, click on the top here. Based on this principle, you can use your home for many purposes during different times, so you should look into real estate market that gives you such functions. Number 2, real estate investment should combine both productive activities and financing. This is a key principle that will help you grow more wealth in good times and stay liquid in bad times. The primary mortgage rate as of July 15, 2021 is going low again to 2.88% for the 30-year fixed mortgage rate, 2.22% for the 15-year fixed rate, and 2.47% for the 5/1 adjustable rate. These rates will create more demand for people to buy properties using financing. However, real estate is an important tool that cannot thrive without real economy as the backbone. A property that you buy in a certain area needs to provide you with a rental income driven by pillar industries that produces pure cash flow without financing of any kind. If real estate investment is solely based on financing without substantial support from the productive activities backed by real economy, the government has no choice but to print more money to soak up the debt, which drives up the inflation rate and leads to a dead end. A combination of productive activities and financing will break this dilemma and create a life cycle. So even if times are tough, there is still hope of growth. Number 3, choose the right mortgage rate and the right amount of loan. I'm not saying that financing is all bad, because clearly you can use a certain amount of down payment to buy your desired property. If you're using financing to buy during this time, you should be very careful about choosing the right mortgage rate and finance the right amount. Just because there's a low mortgage rate doesn't mean that you should max out your financing amount. Especially during this time, you should probably do the opposite. You should pair up a low mortgage rate with a higher down payment, which allows great growth on your equity and limits the amount of loan principal and interest you have to pay back. Number 4, cash buyers see better returns in a rapid growth period before a coming housing crash. I know this principle sounds a little daunting, and many of you may wonder, is it still worth it to invest during this time? And the answer is, it'll be more worth it if you use cash because equity buildup is easier. We can refer to the current housing trend for single-family homes in Florida as an example. According to Florida realtors, there's an increase in closed sales to 30,985 units of single-family homes from 19,622 units when comparing May 2021 and May 2020. In the same comparison basis for the month of May, the number of cash buyers increased to 9,376 from 3,771. The median sales price grew to $344,900 from $270,000. Now, let's take a look at the trend for cash buyers on each month from January to April on a year-over-year basis. When comparing January 2021 with January 2020, the number of cash buyers grew to 5,649 from 5,087. So they're pretty much the same with little growth. In February, cash buyers grew to 6,936 from 5,703. In March, cash buyers grew to 9,371 from 6,351. In April, cash buyers grew to 9,896 from 3,955. Clearly, you can see a pattern of increasing number of cash buyers more than financing buyers in the first 5 months of 2021 in a period of housing boom because there's a better chance of growth. Number 5. Divide your near-term strategy from your long-term strategy. Everything has two sides. The 6 signs that I mentioned in the last video also have good and bad sides. High inflation rate and high unemployment rates will lead to stagflation. However, there are also other asset types with flexible terms that will give you a good return during this time. It's not like you have to keep all your money in the bank, watch it depreciate, and do nothing. Depending on how much equity you hold, in the near term, you need to find out which asset types, including real estate, are fit for you to make a good return. And you should also do the same for your long-term strategy. The key is that near-term opportunities are different from long-term opportunities. Number 6, the last buyer has a way out. So what should the last buyer do? Obviously, we have not arrived at a level that we've seen in the 1970s or 2008 yet. We're sort of in a position where everyone knows that the housing boom is going to continue, but don't know how long it's going to last and when the crash is happening. It's neither here nor there. And in this type of situation, nobody wants to be left out in an upcoming trend, but also no one wants to be the last buyer. And government of the last resort doesn't count. Since there's no way of knowing exactly when the housing crash will come, there's also no certain way of knowing if you'll be the last buyer. But say if you do become the last buyer, is there a productive activity that you could capture? The answer is yes. In the next video, I will solely focus on this topic and delve into the strategy for the last buyer. So stay tuned. As always, thank you very much for watching, and I'll see you on the next one.